What are you seeing right now?
Yeah, I think it's just a continuation of 2021. So we still see pockets of instability and a lack of transparency and predictability in the supply chain. That story is going to continue through really all of 2022. We don't think there's going to be any major reprieve in terms of market stability and predictability. Having said that, I think the report card for the retailers was actually quite good during the fourth quarter and during the holidays, as they did a great job of handling a lot of pressure on their supply chains and responding to a lot of consumer demand at a time when things have been pretty disrupted. So I would say generally the market is doing what a market should do, which is responding to these developments. But in terms of consistency and predictability, supply chains are going to be stressed.
The big guys have the clout to be able to do that. Mid-sized, smaller businesses, less so. Are we going to continue to see a division between those that have the kind of the heft and the weight to be able to get what they need and those that don't?
Yeah, it is a basically winner-take-all market in some sense of the word, or the haves and have-nots. But we've seen that really since beginning of the quarantine or beginning of COVID, is that the big box retailers and the companies that have sophisticated, robust supply chains, the technology to respond, and the power over the carriers have done exceptionally well. And a lot of small businesses, manufacturers, and industrial product operators that does not have that infrastructure have really struggled. Certainly, you have seen pockets where big companies have come out and reported that they're having supply chain issues, but they're responding and really dealing with those much quicker than what most small businesses can actually do. So we would say that generally companies that are making investments in supply chain technology are doing much better than those that are not. And because we track a lot of the individual companies, we actually see it to a company, the ones that are making those investments and have built robust visibility systems and resiliency in their supply chain are doing much better than what you see with those that don't and have not made those investments.
Craig, what's happening with Omicron? The numbers are obviously very high in terms of the case count right now. That presumably is taking people out from the labor market. How big an impact is that having?
You know, I think it's inconsequential in the big thing, sort of supply chain, sort of on the long run. It's just a continuation of COVID. It is having small pockets of disruption, but this story feels like it's going to play out pretty quickly and is going to be sort of a short-term impact. I think stuff that's really longer term is really how do we get capacity? And if you're talking ocean liners, it's how do we get ships and the boxes, which is going to take a couple of years before the market really brings enough capacity online to handle the volume. And then as it relates to the trucking industry, the question is, how do you get truck drivers? This is an issue that the trucking industry is continuing to face, and they don't seem to have any real quick answers on how to address that. And so it's going to be a systemic issue that's going to face them. It's going to create high pressure on pricing throughout 2022. And really the only thing that would sort of solve for that is if we saw an economic downturn, which really no one's predicting at this point.
In terms of what is happening at the other end of the supply chain, China, what do you see there? The country continues with its zero COVID policy. As you monitor events, what are you seeing coming out of China? More importantly, what are you seeing not coming out of China?
Well, I mean, they're shutting down ports. They're shutting down manufacturers. We saw last year where they were actually, as they were having pressure on the grid and pressure on energy, as they were actually forcing some districts to shut down or go to a more limited production cycle. That does have an impact. But in some ways, if you think about the relief that it provides the North American supply chain, in some ways it helps, because really what's causing a lot of pressure in North America is just the influx of product moving across the ports and into the shores. And so when we see some level of slowdown, it actually in some ways relieves or could potentially relieve the bottlenecks that happens at those choke points. So I don't think domestically that we are significantly impacted by the Chinese story in terms of shutting down ports or shutting down manufacturing. I think the story as it relates to North America and Europe is really what's happening in the country itself or in the continent itself. And really what we have is a lot of boxes or containers that are stacked at the ports. We have ships that are waiting to get to berth. And then we have trucking operators, which don't have enough drivers to haul the amount of freight that they have to haul, along with warehouses that don't have employees to take those trucks and break them down.
Yep.
So there's just a lot of pressure everywhere. And I think it's more of a domestic story today than it is something that's global.
Okay, let's talk about the other side of the ledger. We talked about the kind of the supply side, the availability of products, making that product available for consumers. What are consumers buying right now? Are you noticing a shift in consumption patterns?
No, I think really what we saw is a generational shift in consumer spending back during the early stages of COVID. And that has continued to stay persistent. There's been short blips or conversations about back to office where you're starting to see people buy proper pants or slacks to go into the office or clothes that would be more of an in-office environment. But those seem to be really short-term blips that have not been persistent. So we think the spending pattern of consumers of buying more physical goods is actually something that is not going to shift or go back to the way it was pre-COVID. And we think consumer habits have permanently changed on how they consume and where they live. Certainly, we've seen the cities do better than what some people projected, that they wouldn't go back into places like New York City or London, but that has not played out. We do see sort of a resurgence in demand and people coming back into city centers. But a lot of this is living. They're not actually coming back to work on a regular basis. And that puts a lot of pressure on people that provide services in those communities. But as it relates to physical goods have stayed in high demand. We see both consumer spending driving that. We also see this infrastructure bill and government spending, government stimulus driving a lot of additional demand. And we think that story plays out for many, many years.